Welcome to the era of CBDC, Central Bank Digital Currency. A digital currency issued by a central bank, full control over every cent you earn and spend. Today, money exists in three forms: cash, paper bills and coins, anonymous. You hand over $20. No one knows who you are, what you bought, or why. The transaction exists only between you and the seller. Bank deposits, numbers in your account. Technically, this is not your money. It is a promise from the bank to give you your money back on demand. The bank sees your transactions. But there are many banks, competition, regulation, and a bank is not the government, cryptocurrency, Bitcoin, Ether. Decentralized. No government controls them. No central authority can freeze your wallet. That is exactly why governments hate them. The digital dollar is the fourth form, and it is fundamentally different from all the others. Many people are confused. Is a digital dollar like Bitcoin from the government? No, it is the complete opposite. Bitcoin is decentralized, thousands of computers all over the world. No one controls the network. No one can change the rules on their own. The digital dollar is fully centralized. One system, one authority. The Federal Reserve controls everything. Bitcoin is pseudonymous. Addresses are public, but linking them to a real person is difficult. There are privacy tools. The digital dollar is full transparency for the state. Every transaction is tied to your ID forever. Bitcoin means you own your money. Your key means your coins. No one can take them without physical access to you. The digital dollar means you use money by permission. The government can freeze it, confiscate it, or restrict it with a single click. The difference is like the difference between owning a personal car and renting one. In a rental, you can drive wherever you want until the owner decides otherwise. The architecture of the digital dollar is simple and frightening. Every citizen gets a digital wallet, not at a commercial bank, directly at the Federal Reserve, or through a bank, but with direct access for the Fed to all the data. This is the key change. Right now, the Federal Reserve has no direct relationship with you. It works with banks. Banks work with you. That middle layer creates a buffer, a layer of protection, at least some minimal privacy. With a digital dollar, the buffer disappears. The Fed sees every transaction you make in real time and records it forever. You bought a coffee, recorded. You paid rent, recorded. You sent money to your parents, recorded. You donated to a church, recorded. You legally bought a firearm, recorded. You paid for a medical procedure, recorded. You subscribed to a political magazine, recorded. Every cent, every second, forever. A database of the entire economic life of the country in the hands of a single institution. The Federal Reserve and the government promote the digital dollar using noble slogans. Financial inclusion. About 6% of Americans do not have a bank account. Poor people, immigrants, people with bad credit history. With a digital dollar, everyone will have access to financial services. It sounds good. But many of that 6% deliberately avoid the banking system. They do not want to be inside the system. Now, there will be no choice. Fighting crime, drugs, money laundering, tax evasion, terrorism, all of it will become impossible. Every transaction is traceable. It sounds reasonable, but statistics show that most criminal money already flows through the banking system. It gets laundered through legal businesses, real estate, art. Criminals adapt. Ordinary citizens lose privacy. Efficiency and speed, instant transfers. Around the clock, no fees, no intermediaries. That is true, but Venmo, Zelle, and PayPal already do this. FedNow, the Fed's instant payment system, launched in 2023. So why is a CBDC also needed? The official explanations do not explain why the state needs direct access to every transaction of every citizen. The real reasons are different. Right now, the Federal Reserve controls money indirectly. It sets interest rates, but banks decide who gets loans. It prints cash, but does not control how it is spent. It buys bonds, but the money spreads through the economy in unpredictable ways. This is called the transmission mechanism. It is slow, imprecise, and full of leaks. With a digital dollar, transmission becomes instant and absolute. Negative interest rates. The Fed wants to stimulate the economy. The rate is minus 3% per year. Your money loses 3% every year just by sitting in your account. Right now, you can withdraw cash. Put it in a safe. Avoid negative rates. With a digital dollar, there is nowhere to run. There is no cash. Your money melts away, and there is nothing you can do. Direct payments to the population. The pandemic showed that distributing money through banks is slow and inefficient. Checks took weeks. Many people received nothing. With a digital dollar, one click, and $1,000 appears in the account of every citizen, instantly. This is a powerful tool. Powerful and dangerous, because whoever gives can also take away. This is the most frightening aspect of CBDC. Money can be programmed. What does that mean? Money with an expiration date. The government issues stimulus payments, $1,000 to everyone, but the money must be spent within 90 days. After that, it disappears. The goal is to force people to spend and stimulate the economy. Saving is not allowed. Delaying is not allowed. This has already been tested. In China, digital yuan was distributed with a timer. Spend it or lose it. Money with category restrictions. These dollars can be spent on food and clothing, not on alcohol, tobacco, weapons, or gambling. Or these dollars can only be spent on green products. Electric cars are allowed. Gasoline cars are not. Or these dollars can only be spent on domestic goods. Imports are blocked. Who decides the categories? The government, which changes, and has its own interests. Money with geographic restrictions. These dollars can only be spent within 50 kilometers of your home. Support for local business, or a restriction on movement. Depends on your point of view. During the pandemic, governments restricted movement. With a digital dollar, this can be done economically. No need to ban travel. Just disable the ability to pay outside the allowed zone. Individual restrictions. You bought too much alcohol this month. The system decides, enough. Your next purchase is blocked. You spend too much on carbon-intensive goods. Your carbon limit is exhausted. Gasoline is blocked until next month. Sounds like science fiction? China is already doing this. The European Union is discussing personal carbon budgets. The technology is ready. China built a social credit system. America watched in horror. That could never happen here. With a digital dollar, a separate system is not needed. Your transactions are your profile. Algorithms analyze purchases. Machine learning builds behavior models. The system knows more about you than you know about yourself. What you eat, what you read, where you go, who you interact with based on transfers, what you are interested in, what you think based on subscriptions and donations. This data can be used for targeting. Advertising is the small part. Political campaigning, personalized propaganda. Cambridge Analytica looks like kindergarten compared to this for discrimination. Insurance companies see your purchases. Too much sugar, higher premiums, risky hobbies, insurance denied, for control. You donate to the wrong organizations. You buy suspicious products. The algorithm flags you. What happens next depends on the government. Right now, freezing your bank account requires a court order, a process, time. You can challenge it with a digital dollar, one button. Canada showed this in 2022, the trucker protests. The Trudeau government froze bank accounts of participants and donors without court, without warrants, under emergency powers. People who transferred $50 to support the protests lost access to their money. That was done using regular bank accounts. Slow, complicated, with resistance from banks. With CBDC, it will be instant, centralized, with no possibility of resistance. They do not like your political views? Freeze. They do not like your social media posts? Freeze. They do not like the organizations you donate to? Freeze. Who decides what they do not like? Whoever controls the system. Today, one party, tomorrow, another. The rules change. The system remains. A digital dollar only makes sense if it is the only option. Cash. It will be phased out gradually. First, it becomes inconvenient. Fewer ATMs. Stores prefer cashless payments, fees for cash transactions. Then it becomes suspicious. Why do you need cash? What are you hiding? Transactions above $600 are already reported to the IRS. The threshold will be lowered. Finally, it becomes illegal. For your own safety, to protect you from criminals. Sweden has almost abandoned cash. Many stores do not accept banknotes. This is presented as progress. Cryptocurrencies. Regulation is tightening. The SEC is going after exchanges. Banks refuse to work with crypto companies. The next step is a ban, or a 90% tax, or criminal prosecution for using it. China banned cryptocurrencies in 2021 completely before launching the digital yuan. Foreign currencies, capital controls, restrictions on exchange, complex reporting requirements for those who hold money abroad. The goal is to force everyone into a single system, the digital dollar, with no alternatives, with no exit. Do you think this is the distant future? Look at the world. China, the digital yuan has been operating since 2022. 260 million wallets, $250 billion in transactions. The government sees everything. Integrated with the social credit system, Nigeria, the Naira was launched in 2021. The government limited cash withdrawals to no more than $45 per day. People protested. It was useless. The Bahamas. The sand dollar is the first national CBDC in the world. Since 2020, a small country, a big experiment. Jamaica. Jamdex launched in 2022, mandatory for government payments, Eastern Caribbean. Dcash has been operating in 8 countries since 2021. India. The digital rupee has been in pilot mode since 2022, 1.4 billion potential users. The European Union. The digital euro is in development. Official launch is planned for 2027 to 2028. Ursula von der Leyen calls it a priority. The United States. The Federal Reserve is studying the issue. Project Hamilton with MIT has been completed. The technology is ready. The decision is political. 130 countries, representing 98% of the global economy, are researching or developing CBDCs. This is not a question of if, it is a question of when. Not all politicians are asleep. In the United States Congress, bills have been introduced against CBDCs. The CBDC Anti-Surveillance State Act aims to ban the use of a digital dollar for surveillance. Republicans are mostly opposed. They see it as a threat to freedom. Florida Governor Ron DeSantis signed a law against CBDCs in 2023. The digital dollar will not be legal tender in Florida. Texas is moving in the same direction. Other red states are considering similar laws. This matters. It creates a precedent. It shows that resistance is possible. But the federal government can bypass the states. The Constitution gives Congress the power to regulate currency. If the Federal Reserve launches a CBDC, the battle will be hard. Pressure is needed, calls to congressmen, letters, voting. Support for organizations fighting for financial privacy, such as the Electronic Frontier Foundation, Coin Center, and others. While it is not too late, while the digital dollar is not mandatory, you can protect yourself. Use cash. Every cash purchase is a vote against a surveillance system. A store says card only. In most states, this is illegal. Cash is legal tender. Know your rights. Withdraw cash regularly. Keep a reasonable amount at home, not for paranoia, for independence. Learn about cryptocurrency. Bitcoin was created for exactly this reason: money outside government control. Yes, it is volatile. Yes, it is difficult to use. But it has existed for 15 years. It has survived every attempt to ban it. It works. A small portion of savings in Bitcoin is reasonable insurance. Not investment advice, common sense. Privacy coins, such as Monero and Zcash, provide real anonymity. Governments especially hate them. That says a lot. Physical assets, gold and silver, 5,000 years of history. They cannot be frozen. They cannot be turned off. They cannot be programmed. They cannot be devalued at the press of a button. Physical metals in your possession are outside the system. This is not an investment. It is insurance. Diversification. Do not keep all your money in one bank. Do not keep everything in one jurisdiction. Do not depend on one system. An account abroad is not tax evasion if you report it. It is risk diversification. If one account is frozen, another still works. The more distributed you are, the harder you are to control. Engineers are working on privacy protection, zero knowledge proofs, a technology that allows you to prove a fact without revealing details. You prove that you paid taxes without showing what you spent your money on. In theory, a CBDC could be built on this technology. The European Union is discussing anonymity for small transactions, up to 1,000 euros without tracking. In practice, governments do not want this. They want control. Privacy is an obstacle. Decentralized finance, or DeFi. Lending exchanges, savings on the blockchain, without banks, without governments. This is a parallel financial system. It is growing. $50 billion are locked in protocols. It is hard to regulate because it is everywhere and nowhere. Mesh networks and local currencies. In an extreme scenario, communities can create their own exchange systems. This has happened before. During the Great Depression, local currencies helped economies survive. Two paths. The first path is total control. CBDCs are implemented, cash is eliminated, cryptocurrencies are banned, every transaction is recorded, every citizen is under surveillance. Those who disagree are cut off from the economy. This is not Orwell. It is worse. Orwell did not have the technologies that exist today. Within a generation, people will forget what financial privacy is, just as we forgot what life without cameras on every corner was like. The second path is balance. Society wakes up, laws protect privacy, CBDCs are introduced, but with limits. Anonymity for transactions up to a certain amount, a ban on programmable money, the right to cash in the Constitution, cryptocurrencies are legal, competition between systems, freedom of choice. This is possible, but only if we act now. What to do today? Understand, most people do not know what CBDCs are. They do not understand the consequences. Convenient is all they see. Speak, explain to friends and family. Not paranoia, facts. The more people understand, the stronger the resistance. Act politically, write to congressmen, vote, support organizations that fight for privacy. Protect yourself. Cash, crypto, gold, diversification. Not tomorrow. Today. Do not trade privacy for convenience. Every time you're asked to give up privacy for convenience, think, a free service is paid for with your data. A convenient system controls you. The digital dollar is not about technology, it is about power. Who controls money controls people. Pharaohs knew this, emperors knew it. Modern governments know it. For 5,000 years, money was a tool of freedom. You could earn, save, and spend without permission. This is the foundation of a free society. The digital dollar changes this. Your money is no longer yours. It becomes a privilege that the government gives and can take away. This is not a conspiracy theory. These are official Federal Reserve documents. These are working systems in dozens of countries. These are bills in Congress. The window of freedom is still open, but it is closing. The question is not whether this will happen. The question is what form it will take. And that depends on us. History is watching this generation. What will you do when money stops being free? Your answer begins today.